I am delighted to welcome Kristoff, the founder and CEO of Accubix and KYC Portal to Fin Spotlight. Welcome, Kristoff, and thanks for joining me today. We're going to be talking a bit about client lifecycle management and lifetime due diligence today, an area that I know you and KYC Portal are very focused on. But maybe just to set the scene a little bit, and maybe you could just give us a quick introduction to yourself and KYC Portal.
Yes, of course. As you said, Kristoff, I'm a business analyst by profession. Nowadays running the company, CEO of KYC Portal. KYC Portal is a product that we launched officially on the market in 2017, in February 2017 in London. It's a product that focuses on automating, or rather streamlining, the back office of any due diligence process. So the process that is usually done by a team of human beings and constantly collating the data, assessing the risk, chasing for information from customers, practically maintaining and reviewing the ongoing due diligence within a company. So KYC Portal focuses on automating, digitizing that process.
What does, client lifecycle management is still a relatively sort of, I think, misunderstood term in the industry, and means different things to different people. What does client lifecycle management mean to you? And I guess what sort of are the critical components from your point of view of what really makes up client lifecycle management?
As you said, client lifecycle management is such a broad view that it could relate to many aspects, many industries for different services. We focus purely on the client lifecycle management of due diligence. In fact, an interesting fact even about our product, when we launched our product, we thought that our market would be regulated market, companies in regulated industries that need to comply with money laundering aspects and managing risk. However, I believe over the years, even we learned a lot, because we started getting requests from clients who have nothing to do with the regulated market, precious metals and logistics. And we found out that what they were after is, yes, due diligence, yes, managing the life cycle of different partners in the business, like, for example, supplier onboarding, onboarding of business relationships. So we learned a lot that life cycle management in due diligence is not only from a money laundering and risk perspective, but also to manage the process, a very tedious and long process of onboarding a relationship rather than a customer, and managing everything that goes with it all throughout the relationship. Why? Because the life cycle of a client in due diligence starts, yes, at onboarding. However, it resumes and proceeds until the relationship with that client continues, be it a customer in a bank, be it a supplier until you're using the supplier. So client life cycle in our industry, focusing on due diligence, covers from the very first onboarding aspect of the relationship until the lifetime of the relationship, often called as ongoing KYC.
So you just touched on there that actually you thought it would be regulated entities who would be your primary customer, but actually it's been maybe a little bit different in reality. What are some of the challenges you're solving? I think you've just touched on a few of them, but what are some of the challenges you've been solving, I guess, on both sides of it there, for regulated entities and for those non-regulated entities?
I think we used to have a list of that when we used to sell our stuff. But however, I think we've boiled them down to two main aspects, which is cost and risk. And the two of them go hand in hand. So without a system like ours, and with a system like ours, the biggest aspect is risk. Everyone is reducing or trying to reduce the risk that they are exposed to, be it onboarding or working with a customer or a supplier who might expose our brand to risk, be it regulation risk, be it fraud risk, be it any element of risk which could be a detriment to my business, from a brand reputational perspective or from an operational perspective, because I get fined. The other side to that is the incredible cost that I as a company have to incur to get enough expertise, manpower, and people to manage that risk. So, for example, the more customers I have, the more people I need to stay on top of that risk and make sure that everything is fine. Because risk nowadays could be anything, anywhere around the corner, even sitting there in your database, not realizing until the review comes. So what our product focuses on and that is why we streamline that part. It focuses on automating risk calculation, making it real time. So rather than having a system that when the review comes, I realize that I'm exposed to risk and I try to backdate things to fix them. So I ask for documents after it expired. I ask for a certain document after a transaction happened. The system focuses on presenting that information on the day, on the minute that you are exposed to risk. So because we're making that element of risk real time now, the exposure that you have, it reduces the manpower that you need to try and stay ahead of it. So what our system does is, yes, we reduce the risk exposure that a company has, at the same time as reducing the cost to actually get there, to maintain it.
And there's quite a few. I'm sure as a growing company, you're coming up against all the competitors in the marketplace, and it's how do you think you've approached the challenge maybe of client lifecycle management sort of differently to others in the market? What have sort of been the key things you guys have already wanted to focus on in terms of getting that right?
The biggest one is the element of how dynamic the system is, our system is. When we created KYC Portal, when we came up with the idea of KYC Portal, we were very lucky to have 6 market players. We had a bank, a gaming company, we had a legal firm, we had 6 different industry companies who teamed up as stakeholders to give us a platform, to give us an audience to be able to go there, follow what they do and understand what they do. And one of the things that is fixed across all the industries, across all the companies, was that regulation is constantly changing. That the requirements of what risk is constantly change, that internal policy is constantly changing, that money laundering directives are coming out every almost year. So we wanted to build a system that is as fluid, as dynamic as the market requirement is. That, I think, was the best decision we took, because it helped us create a product that allows the client to tweak everything in the policy from A to Z, including the risk, including the document requirements, in real time, which led the product and us to penetrate so many different markets, because everyone can tweak it based on his needs. It led to also different industries, different jurisdictions, because there is no limit as to what you can set in it. That advantage also helped us a lot when it comes to competitors, because to be able to build a product like ours, it has to be from the ground up. So the backbone of the system has to be prepared, be ready for a system that is as dynamic. You cannot tweak something that you have already into something as dynamic, which gives us a very big advantage on the market, because there aren't many, at least I don't know of any other system that is or comes to as close to ours when it comes to dynamic elements. The other major USP that we have is the embedded outreach modules. Because we created, so KYC Portal started off without the outreach modules, it was purely back office. But then based on client demand, we started adding the outreach modules, and adding the outreach modules into catering the life cycle, the full life cycle, because we used to be only the back office. Together with this dynamic element created a very, very good combination, which gave us a very good advantage on the market.
I'm interested. What are some of the elements that you've kind of made dynamic then, or you talk about absolutely been a sort of core part of the strategy and a fundamental part of the product. What are some of those kind of elements that you've made sure are dynamic and configurable?
Literally everything. So the obvious ones. So managing of risk, what risk is, documents, templates, statuses, managing the life cycle, rules, triggers, and scripts. Those are the obvious ones that you would find systems now coming out with those being dynamic. However, we also created the underlying structure, for example. So in a life cycle management system, we have what we call entities, parties. So for example, if I'm onboarding a corporate, I have a company, and behind the company, I have a director and a shareholder. Even those elements are fully dynamic. So it's up to the client to decide what the entities are, what they call them, and even the actual fields, the data sets of each entity are defined by the client. So if regulations change tomorrow and suddenly we need to ask silly question, what the color of the car of the director is, they can actually go in and create a new subset of data just to collate that. So we created a system that is flexible enough to even cater for new requirements that are yet not defined.
Well, what are some of the again, coming back to, I guess, some of the way others have built CLM solutions and KYC solutions, what are some of the key components you see as making up a good system? And just to give that a bit of flavor, I guess you've just touched on some of the dynamic elements, but what needs to go into because it is such a kind of it combines so many capabilities. What are some of those capabilities that you've identified and made sure that you build into that?
Well, the obvious ones would be the workflow module, the status modules, the rules module that triggers what workflows need to happen based on what data is being input. However, for example, one of the most crucial elements in our CLCM, because we cater for due diligence, is the risk element, the risk module. The risk module is crucial because I think apart from calculating risk in real time on all the data being input, it also embeds in it the fact that whatever risk change happens, the client is deciding what that risk change will lead to in the workflow, whether it's reassigning applications to teams with escalations. However, I think one of the biggest, most crucial elements of any system is an API, a means to allow the system to communicate with other systems, especially when you're focusing on CLCM, because CLCM is no CLCM will act or live on its own in a siloed environment, in a bank, in any ecosystem. Why? Because a CLCM is needed to merge usually the flows between other systems, communicate, use data, pull data, push data, and then based on the actions it is doing, triggering events in other systems as well. So I think the most crucial element is an API that allows the client, the development team, to be able to hook up such elements to push, pull data, use it, and then even push actions back to the other core systems.
I was also just wondering, I mean, given your kind of experience as well with regulated entities and non-regulated entities, what kind of level of understanding do you think there is in the market for this kind of backbone solution and CLM in general? Do you think it's a well understood concept at the moment, or do you think is people's understanding growing? Where do you think the market is in terms of understanding it?
It's growing. It's definitely growing, and over the past 2 years, we've noticed an increase in demand and an increase in requests, which means that the interest is growing. I think there is still a very huge fear of legacy systems, because we get it a lot from clients that ask, listen, can your system help us integrate with these? Because we are using these systems and it's impossible to hook up with that system. Apart from that, I think the biggest stumbling block is that clients tend to assume that a CLCM like ours should replace their existing CRM or ERP, which it doesn't. It lives in tandem. So one of the biggest concerns when we get approached is, but listen, I already have this CRM system. I don't want to change it. Listen, our system does not replace that. Our lifecycle management platform focuses, yes, on the due diligence. It will not change the concept of your record set or how you're doing data. It is in tandem to automate the certain actions that usually are done by a human being. So the market is, I think, getting more aware of systems like these, but there's still a long way to get to a stage where someone says, yes, I need a CLCM. It is something that is learned as you go along, as you may be researching for another thing, and you stumble across a system like ours, you say, oh, okay, this doesn't replace everything that I have. This is in tandem fixing that problem. So, yes, still far away from a perfect market for us to sell, but getting there.
Well, I would completely agree with that as well. What are some of the main, I suppose, challenges you would see with FIs in terms of turning, bringing in CLM systems and what they're trying to do with them? Do you think, I mean, you mentioned legacy systems there as kind of a key part, and maybe confusion about what CLM is or what kind of these due diligence systems are trying to do compared to a CRM system. But what about also thinking about customer experience? What do you see as some of the main drivers in people looking for CLM systems now, especially I guess from your own experience when they're coming to you? What are some of the main drivers?
Drivers is cost. It's costing companies way too much to keep up with the obligations of regulators, for example, as well as the exposure to risk that I mentioned before. Reason being is markets, especially over COVID, I mean, the online aspect of businesses has increased. Banks started onboarding customers via apps and via digital transformation systems, and where they never met the customer. However, the requirement, the obligation of meeting a person face to face is still there, because otherwise it has to be deemed high risk. So the access, the access of online business, as well as the cost to keep up with such online business. For example, gaming market, have a client who has 5.2 million players. It is impossible to keep up with the due diligence of 5.2 million players on a daily basis, screening, checking documents expired without a system that automates that process. It could be not ours, it could be anyone's, but in this case, it's ours. So it's impossible to keep up with such an element. So I think impossible. In the past, and there are still companies who do it, they employ more resources, and the compliance team keeps adding and keeps adding and keeps adding. However, when you throw more resources, human resources, at a problem, yes, it's exponentiating the cost, but still the element of human bias and human error is still something that could lead to higher risk. So I think cost and the regulations being so on money laundering, on fraud, being so rigorous and becoming even more rigorous. I mean, now the new money laundering directive is being issued for next year. The 8th money laundering directive is already being discussed. The requirements are so rigorous, so onerous, that it's impossible to keep up, and you have to resort to technology. What is the biggest challenge? That is the biggest driver. The biggest challenge is cost, I believe. Cost of not only buying the software, but the cost of implementing. Yes, it's a one-time cost, and most companies nowadays are understanding that, listen, yes, it's a one-time cost, but then the savings that we're going to have after, the return on investment is very fast.
I was going to ask, what do you think are some of the, we've seen that CLM implementations go kind of badly wrong and take a very long time to kind of see any return on investment. What are some of the challenges with implementation that you might see? Is it because it does cross a number of functions within organizations, or tends to, or do you think there's some other what are some of the other challenges you see?
I think you mentioned the biggest one. The biggest challenge is that in a system like this, it touches many elements and many departments who usually have their own silo of policies to work with and find it. When we go in, I think two of the largest projects we did, when we go in for a system like ours, we always ask for the as-is process. We tell them, listen, give us the as-is process, let's design it. However, usually even that is a challenge. A company that would not know the as-is process, or rather they would have a documented policy, but when you start drawing it on picture and you get all the stakeholders in the meeting, they start arguing, and no, that doesn't happen like that anymore. This goes there. So yes, the biggest challenge is defining the to-be process, but assuming that the as-is process is known. So that is where we usually help as well. With business process re-engineering, we go in, we understand, we build the as-is process on paper, and then we start tweaking, changing, automating parts of the to-be process to make it more efficient.
We often see the sort of CLM solution as being a bit of the backbone of the whole process, really, and that orchestration layer as well, as you talked about. How important is it from a solution perspective and from your customer's perspective that you've kind of your partner ecosystem as well, and the partners that you want to connect with? And I suppose what's the role of, maybe a broader question as well, as what do you see as the role of RegTech in building that ecosystem to make it more simple for organizations to integrate with many solutions?
We adopted a different business approach, a slightly different business approach. So to your first part of the question, they are very important. Data providers, partners with regards to data for political exposure, sanctions, investment media, company house data are crucial for a system like KYC Portal to operate at its best. Why? Because the more automation, the more information the system has from internal systems, from third-party systems, the better, the more you can automate in a process. So, for example, for a client who managed to automate the entire digital onboarding of retail customers with opening a bank account. Why? Because we were hooked up with credit rating systems, we have hooked up with PEP sanctions, so you get the real element, real-time element of data and risk exposure, so creating to more automation. So the more intelligent the system is, the better for decision process and automation. However, Whilst most of the RegTech companies on the market partnered up with specific suppliers, we decided to take a different approach. Said, no, listen, we are KYC Portal. We focus on what we know best. We do not do data. We don't want to do data. And we focus on CN and HCM. However, we didn't want to partner up with anyone. We wanted the client to be open to decide who they want to choose and implement with KYC Portal for two reasons. First of all, we don't want to be biased. We do not understand the data market. We don't want to be experts in it. There are so many suppliers who do an excellent job. It is pointless reinventing the wheel. Second, larger clients that come for KYC Portal usually they have contracts in place where they tell us, no, listen, I want KYC Portal with that one, that one, that one, that. So we left it open. We integrate, yes, it's a bigger cost for us. We integrate with whoever the client tells us, and we do it for that client. So it's not part of the product, but part of the implementation.
Makes sense. And maybe just maybe a final question, just in terms of, where you see, how do you see CLM evolving over the next couple of years, and maybe linked to that, kind of, how do you see KYC Portal? What does the future look like for you over the next couple of years?
We are letting our clients decide that. So yes, we do our research. Yes, we have people who focus on R&D and come up with ideas that can make the product better. But what's better than the clients themselves telling us what to do? So since we launched the product in 2017, we adopted an approach where clients, where our Jira board, they say, listen, it would be nice to have this, it would be nice to have this feature would be fantastic. How are you planning to do this? We merge all those, we discuss, we have a team that focuses and discusses on these features, see the benefit. We come up with wireframes, discuss them with clients, see who would say, yes, that's fantastic or not. And we keep building based on these features. In fact, we're always packed with new features 2 quarters ahead. So for example, what's coming in now is going Q3 next year. The way that we are seeing things moving based on client requests is purely on more automation. Like, for example, ability to digital sign documents within the portal when you do the customer outreach, the digital outreach of self-verifying individuals. So the focus at the moment, KYC Portal is very strong on the back office. As I said, we started off focusing on that area. The outreach is something that evolved over the past 2 years, but client requests are coming in for more automation on the outreach side.
Okay, really interesting. Well, look, thank you for joining me, Kristoff. That was really fascinating to hear a little bit about what you guys are up to and some of to hear your perspectives on the market as well. Thank you again.
More than welcome. Thank you for your time, Matt.
Thanks.